Good afternoon. Welcome to Options Center. It is Sunday, 1/29/23. Hope everybody had a wonderful weekend. If you are new here, thanks for joining us. And go down to that bottom right-hand corner, hit that Options Center logo, and subscribe. And thank you all for all the comments and likes and all those things that you've been doing. It's really helped the channel out tremendously. So today is our weekend edition. So we're going to go through SPX on multiple time frames. We're going to stick to the higher ones for a little longer, and then we'll just kind of jazz through the smaller time frames. If you want to check out Friday's video, then that goes on the smaller time frame a little bit longer. So here we go. Let's jump into it. On the monthly time frame, we have, after a flat pattern with this 2009 bottom, we have skyrocketed for a possible wave 5 in this channel. 1, 2, 3, 4, 5. Therefore, if this 5 is over, this 5 wave move is complete, then I would suspect we would fall underneath this channel and continue lower at that point before we initially make a another move up. Possibly this 5 wave move could be a 1. And we'd come down to some point, maybe a 50-60% retracement for a wave 2. Okay, now I'm going to let you know this is it is possible that this ends here. Okay, we have a wave 4, and we're starting on wave 5, but this is actually of wave 5, 1, 2, and then we'll have an ending diagonal 3, 4, and possibly a 5 up there. That is your bullish scenario that's kind of going around. I don't think too many people believe that at this point, and maybe that's why the market has to kind of shake those bears out and get everybody bullish. But if you notice on this higher time frame, the monthly time frame, we've only really breached this, in 2009 when we had this large move down, and from that point, we've barely come underneath. Even on that Corona crash, a huge move down, we barely pierced it. So we haven't been oversold since 2009, and we're right back at that neutral position. So if we start turning down again, I do think we're going to continue to do so, because we're really towards that bottom there. So we tend to be in a neutral position. We have not made a bull cross on the MACD, but we're sort of right back at the 0 line where it's showing us a little bit of support, and we're getting support off that 50% or 50 simple moving average. Okay, just on a closer note on this higher time frame, we pointed this out on ES, a couple different videos, that this is simply a consolidation. This is a zone. We've done really nothing. We've just ping-ponged back and forth and oscillated around that 8 EMA. And that 8 EMA is sideways. It's a trend indicator. And so we were trending to the downside, and now we're just oscillating around it. And I suppose that's waiting for information whether we're going to start moving up or down at this point. If you want to be real, I mean, I think the Fed wants to lower inflation, and I think they don't want the market to go up. I'm not going to say they want it to go down. I don't think anybody wants to go down, but I think the whole scenario is they don't really want it to go up. And so if they could have it going sideways for forever, I think they would. So let's go down to this weekly time frame. And we had this megaphone. We held on top of it for a long time and broke down underneath it. And we are in a trend to the downside. Yes, we appear to be breaking out from we had a close above that 50 simple moving average on the weekly and this channel. And on the daily, I have a little different scenario that I'll show you, but we have not broken this high yet. Okay, if we do, that strengthens the possibility that we're even more in an uptrend and that we're reversing. It hasn't confirmed. On the weekly, we'd really have to get above this 4,300. That's what really matters to turn this ship around and to say, hey, we're making our way to all-time highs there, and possibly in that ending diagonal that we're talking about. Okay, but market structures, we're just in an equilibrium at this point, and we're still making lower highs and lower lows. Even if we pop up above this one, it would firm up the idea that we're changing. But you can make a lower high up here as well, so to keep this downtrend going. So just awareness, and I'll also point out that the MACD has been strengthening, and it's very impressive. But the only thing that concerns me about this, yes, we're in a bullish position, but we are in bearish territory, and we're just getting to that 0 point where the market can make a decision to go to the downside or continue to upside at that point. And RSI, same thing. We had that divergence, but we're just in a neutral stance still at this point. We're pointing to the upside, but we really have to keep going, because I mean, if you look at it, we're just kind of in a zone here, a resistance zone. So if we start to break above that, that might be the first signs to say, hey, we're going to continue up to the upside. All right. Anything else in this chart? I think this is a better view of, you had this last move, which could be a wave 5 ending, and we move down, or this is going to be wave 1 of 5 for a 1, 2 at that 50%. That's perfectly fine. And then a 3, we should get a new high, and we should cross back over the former high at that point for wave 4. And again, same thing. So, the ending diagonal should get a little bit more bunchy. This big long wave 1, 2, and the 3 should be smaller than the 1, but it should not be the smallest. So that wave 3 should not be smaller than 5. So it should kind of lose momentum and race to the top there. If that's the bullish scenario, I'm not in that camp, but I just want to show you that. All right, on the daily, trend is our friend. So I made a channel here just to give a little bit of different scenario for, we have a lot of nice points hitting on this, and it coincides perfectly with the bottom touches of the channel. So that's starting to firm up there. And then we had these beautiful touches right here, 1, 2, 3, 4, 5 touches there, and we're right at that point as well. So, let's just say, just to show you that could be a point where we're actually starting to reverse. This is a good reversal point, and this is a legit trade setup. And so we have the top of this ascending wedge, and we also have resistance here. This line could be adjusted for those highs there, but we have a couple highs that it's getting right into supply there. And once again, this gap was larger. It was actually down to that 40.34. So it's halfway, a little bit more than halfway closed, but it's just giving more trouble for price to move up there. So and unless this is closed, we could see another downtrend. But this to me looks like it's just looking to be another bearish wedge, just like this one. Falls out of it and just retracing, and the same thing. Okay, so and I always want to remind, we're looking for this target area. The NASDAQ has already gotten to that area. We're looking for that to be the next target to at least get a bounce there, but we ultimately want to get into that region. Now, we can look at before we move on, still triangulating the MACD. So that's concerning that we're near the top. So either break out, break down. The RSI kind of says, hey, we're starting to break out there. we had a downtrend. We're breaking out of that triangle, and so maybe the next destination is going a little bit higher, which would say we're probably going to the 4,300 area to defend off that high, to test it, to see if we can really change this trend here. Okay, just trying to see if I want to. I've been. We can do this. This is for anybody that is brand new at trading. There's market structure. Market structure is super important, and so I made this this new window here just to show that we're in a downtrend. You have this lower high, lower low, lower low, and you're at this lower high. While we're trying to make a low here, and then a higher low. This low cannot be confirmed as a higher low until we actually break this one here. So that's what I'm talking about when I'm saying, hey, in order to firm up this idea, we need to break this high. And then that will give a little stronger scenario to where, hey, this market has a chance to take this one out. We take this one out, now we're on a weekly uptrend. But at this point, we're right here at an equilibrium. I hope that helps. And then let's go over to the studies. And let's get rid of the MACD and RSI. Give us some room here. Let's go to the McClellan summation index first. Oh, that didn't work. Guess I got to apply it. All right. McClellan summation index. Let's put that in, double click on it, apply. It's okay. Now, we're going to go back to different window. And I was wrong about this situation with this. I was trying to show that this was very similar to this point here. And instead, the oscillator, the index, got much stronger. But look where we are now. We're right back at that extreme point where we had a massive move to the downside. This, sure, it could, in a bull market, it's gotten above it. And we kept in this bullish area above it. But in a bear market, this thing just dropped. Will we do the same thing? I'm not sure. It's possible. This is awareness that in a bear market, if the bear market continues, that this shouldn't stay up here very long. Shouldn't stay in this whole territory very long. And so we should see a nice drop, or at least a trend back into the bearish territory. So something to keep an eye out for. And if we go to the oscillator, the actual, not the summation index, but the actual McClellan oscillator, you could see that we've been overbought. We have a bearish divergence, some negative divergence here, with price going up and the oscillator going down. In this same scenario, price still went up. Oscillator was not confirming it. And by the time we got back underneath this 100 area, that's when we started making the drop. So this 100 is a very important area to keep an eye out for. And if we start to get back underneath that next week, then that's a little bit more strength for the bear case. Now, one last thing on the daily here. We're going to go to the Elliott weight count, and we have our main scenario is from this point of view. Let's get that study out of the way. From this point of view, we have a 5-wave move down for a possible A or 1, and then a B or 2, and then a 1, 2. This 2 can be moved. This 2 can be here, but on the NASDAQ actually, QQQ made a slight new high. So if we want to keep it the same, maybe we expect this to actually make a slight new high, or they're going to have different counts. but I usually try to keep them very similar. So we have a 1, 2, 1, 2, and another possible 1, 2. Now, if this is over here, that's fine. It makes no difference to me. What we do want to pay attention to is that from this point, we should go down. It should be pretty clear. It should be just similar to this move here. Okay. If we get this move and it's impulsive, we have to pay attention to what happens next, because this in the gray, if you notice here, we have an A. Now this is a different alternate count. I came up with these two counts. They seem the most probable situations. So if this is a larger A, and then we have a B wave as a flat, A, B, C, that will give us an impulsive move down. So we have to see how we react off of the 618 50% area, where this flat would be. If we already have that A, B, impulsive move C down, we have to see what happens next after that. Do we complete an impulse 5-wave move up? Well, I have some targets already set there for this big old A, B, C move. If this entire move down needs to continue to consolidate and balance out, that would be one way to do it. If we start to make slightly new highs here, I think that's starting to firm up that idea that this is going to have to balance out a little bit more. Now, there's a lot more bullish count that I've seen out there. I'm not counting it this way, that this is a 1, 2, and all of a sudden we have a lot more 1, 2, 1, 2, and it's possible if, on Wednesday, Powell starts saying some dovish stuff, and that this is all going to be a wave 3, and we continue 1, 2, 1, 2, 3, 4, 5, wave move up, and then 4 and 5, and this is, that's a super bullish situation, but I don't see that. This is a bear market, and I'm going to continue to do the more conservative to bearish moves until proven otherwise, and that will be proved by the market structure that we just talked about. Okay. All right. So after this 5-wave move down, we should just get a bounce and then head down for a much faster wave 3. If that's the scenario where this is a more bearish situation and we don't need to balance anymore. All right. I hope that's clear. We are going to go to the 65-minute. 65-minute chart. We're just showing same situation. We're in a wedge again, and we came right back to that gap, the resistance, and then our if we do get above this level here at the 40.80 area, we get above that and start closing the gap, then that's a good safe place to go long until we get to the next level, which would be at about 41.60. And that's also the options expected move for the week. And so that'd be a nice, easy long play to go there if the price keeps grinding. Now, to the downside, if we continue to reject off of this level at 40.80, we're looking at breaking the wedge and coming down to 39.76, which is the options expected move as well. Now, we have that old trend line from the channel that we're talking about that everybody says we're breaking out from. That could just be a back test if we made it to this point. So you have to be very careful about this pullback here, and take profits and wait to see if we get down below this channel. Then that would be another objective point to go low or go short, and then you have a trend line here. So there's a lot of work to do in this area, but it starts to firm up underneath this this channel again, to where we actually go lower from that point. A couple more things that we're going to check out. On the SPY, I just want to show you the near-term count that we have for the bearish count, and also some targets that we hit. We were not playing these. But we have some areas to where All right, so we have some targets that we had from some swings. So we're right at that 1618 from that swing high to low. We hit that target. We actually we took a short here again at 403.72, just about that area, and we rolled out some positions, but we got ran over again when we hit this target here. But also the swing high to low here as well. We hit the 1618. So those targets were all hit for market symmetry. And so that's another bear scenario to where the price accomplished what it needed to, and we could see a reversal from here. Now the count that we have is it can be counted as a WXY. I totally get that, but I'm keeping this simple as an ABC, where this if we are in a wave 2 where this is wave 1, in wave 2 we're really deep in the correction, but it's not impossible. It has not been invalidated until we get above this high. At the high is 410.49. Till we get above that, then we're still in the same situation in a bear stance. Okay, and so this would be a 5-wave move up, a 3-wave move, and a 5-wave move up. That would give us a zigzag, and that's very common for the wave 2. Now, a WXY works the same way. It'd be a double zigzag. So we'd have a 5, 3, 5 for a W, a 3-wave move down for an X, and then a 5, 3, 5 for a Y. But there's letters. That's just a different way of saying it. So that's all I got today. I don't think we want to take a look at. I think maybe we'll see where the VIX is at, because we've been kind of showing that chart. And yeah, same thing. So we'll get in a higher time frame, but you see that it's in a wedge, in a bullish falling wedge. We actually eked out a new low there, so another little divergence on the on some of the indicators. But the more important thing is that this is back to the triangle low here. So I'm going to repeat myself over and over. We're confirmed as soon as we get back over this 19 area. Some people have 20, but 19 seems sufficient. There's a lot of touches on that line. Get back above there, and this thing could start moving. I just don't see it coming below, at least without just it can poke below. I don't see it closing below this line. I think that we will be very bullish, that whole bullish scenario would start playing out if the VIX fell underneath here and started closing underneath. I think we would be going for all-time highs. I think that whole ending diagonal scenario would be much more likely if we start breaking down from that point. So look at all these alerts I have. Jeez. I probably don't need all those right now, but maybe we will. Maybe we'll need those real soon. So that's all I got for you guys. I'm not going to hold you up anymore. This has gone long enough. Thanks for joining us here at Options Center. Don't forget to like the video, and please hit the notification, because I do these videos often. The channel's starting to grow, so I'm going to do these videos once, twice, 3 times a day. Who knows? We are throwing videos for a morning prep now, each and every opening morning. I tried to get those out a little bit sooner. I was trying to get them on Twitter, but I couldn't upload them from this program and whatever. So I'm going to get them out there on YouTube, and I'll put the link on Twitter. Bunch of charts on Twitter. I'll continue to do those. Thanks for joining us here at Options Center. Have a wonderful day. We'll see you soon.